of thumb with respect to trend lines that you can use for your trading. If a trend is intact, you should look for spots to enter on a pullback on the time frame you are trading or lower. We touched upon this a little bit in last week's video where I talked about using the lower time frame to fade stocks. But it's important to remember that if you're trading a particular time frame, let's say it's a 5-minute chart and a 5-minute trend, once that trend's established, we want to establish or add to positions on those pullbacks on 5 minutes or a lower time frame chart. We don't want to do that on the higher time frame. It's time frame you're trading or lower. Rule of thumb number 2, if a trend breaks, you enter a defensive posture, exiting a position once there is additional price action to confirm a reversal of the trend you are trading. And we're going to do some examples in a second on this. Rule of thumb number 3, if a stock breaks an accelerated trend, this can be used to enter a new position for a move back to the shallower trend or to exit a current position that you already have. So those are our 3 rules of thumb. Now let's take a look at some charts with trend lines. Now we can apply them. So the first one is one that I grabbed from today. AMD, a stock that many people on the desk were trading as it had a strong opening drive and then started to trend for the day. So many people on the desk were long the stock via stocks and options. And what I've done on the chart here is I've circled the first area, highlighted the opening drive. Stocks that have opening drives are good candidates for trending for the day. So even if you weren't watching this before the market opened, for breaking above the long-term technical level of $30, if you had a scanner or a filter where you find things with strong opening drives, this would have come to your attention. Now, after the strong opening drive, we put in a morning high. That's that horizontal blue line. It pulls back from the morning high. That's what we call our first pullback from the morning high, and that's a point that we use as possibly starting a trend. And then it takes out the morning high, and then we have what becomes a trend for the morning and into the midday. And so once we have that trend established after the opening drive, the first pullback takes out the high, we look for spots to buy into the pullback to the trend. And so if we're looking at that first horizontal line, which was resistance at the opening high, the AM high, and then became support later in the day, the first time it pulls back to it, somebody who was looking to buy at a support level into the opening high, they might use that, but somebody who was using the trend line might say, hey, this trend line that's starting to form, it hasn't caught up to that price yet. I want to see if it continues to hold it for another 20 or 30 minutes, and then eventually the trend line moves up to that price, and if that pullback comes into that area, which is in the morning high, and the trend meet, that's a really good spot to put on a position or potentially add to a position. And then we watch that trend continues higher, 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 and eventually, a little bit later in the day, it breaks. Now, this doesn't mean get flat the position. This doesn't mean short the position. What we're doing is we're becoming, as I said, I think it was rule of thumb number 2, develop a defensive posture, meaning it's trending up, it's now broken the trend line, it's holding below the trend line, and I've highlighted 2 spots there. I drew an arrow up and an arrow down. Once something's broken a trend line and starts to consolidate, if it breaks down against what the prior trend was, that's a time to lighten up, flatten out your position, and become more mindful of other potential support areas, which in this case was the morning high. Obviously, after it consolidated there, it never broke to the downside, it broke back up and continued to trend on a new trend line intraday, but you get the idea. Let's look at our next example. The next example was something that had a strong drive down on the open and then went right into a very strong downtrend and had a quick, hard reversal bar where it broke out of that morning opening downtrend, failed, and then started to come back in. So again, we had something with a pretty steep downtrend on the open, breaks that steep trend, fails, comes back in, and then it holds the morning low. And depending on whether or not that was a significant level, longer term, perhaps people would use that to cover some of their position because it broke the steep trend. But ultimately, once it got above that blue horizontal blue line I drew, which was kind of the retracement high when it broke the trend in the morning, you'd have to be flat the stock if you were short it from the open or long it on the reversal. So that's just a nice example on that one. And I think we have one more example to take a look at. And this one is Costco, COST. On the open, we had a nice consolidation, a tight consolidation range. And then another way that we develop trends intraday is we have a range in the morning, and then it breaks one way or the other out of that range, and then we have a trend. And so in this case, range breaks, we have a trend. So many people are going to be long on the break of the range. And the question is, after it runs up there a few dollars and it breaks the trend, what do you do after it has that tight consolidation? Well, we covered this in an earlier one. In the earlier one, it actually continued up. It didn't break down. And in this example, what happens after it breaks the uptrend is it breaks to the downside. We have to get out of our position at that point because this might be the beginning of a large reverse to the downside. Of course, at the time, the right edge of the chart is we don't see what happened later, which was after that hard down, it started to move up in a shallower uptrend. But that doesn't matter. What matters to us is it's moving up. It breaks the uptrend. It starts to move sideways, and then it breaks to the downside, potentially starting a intraday reversal. And we have to use that to hit out. So 3 examples there for you to mull over and potentially.
So you guys can add this to your playbook. So what's an IPO? An IPO is initial public offering. Initial public offering is when a private company or a corporation raises investment capital by offering its stock to the public for the first time. And we're getting this from our good friends at Investopedia. It's a private company that you finally can trade on a registered stock market. So the benefits of trading IPOs are they offer easy trades. The trades are clean, technical analysis driven trades. So lots of times you make technical trades and get frustrated that they don't quite work out or they're a little bit bumpy. These are trades that are clean and more likely to work just based off the technicals, and I'll explain why. They offer an excellent risk reward. So lots of times we talk about making trades that have a risk of 1 and a reward of 5. Lots of traders, when they're first learn trades with a risk of 1 and a reward of 2, and we ask them to think about that a little bit more in depth and look for risk rewards that are better. Well, these types of trades can offer even a better risk reward than 1 to 5. Look, these trades can make your month even in a slow month. So I've sat around trading desks for almost 20 years now, and we've had big months during slow times just by having really great IPO opportunities. So we're thinking about this as adding to our playbook to give us more ways to make money. Some traders, they just focus on these trades. It's called syndicate trading. They're just focusing on IPOs and secondaries. And these principles also apply to secondaries. IPOs and secondaries is what professional traders refer to as syndicate trading. And the great thing about trading IPOs is that you're learning the next new hot stocks. You're watching them from the beginning. And that's really helpful as they mature and offer continuing opportunity. The best IPOs, well, there's a buzz about their release. And a good way to just define that is look at the headlines. Are people talking a lot about an IPO that's getting ready to hit the tape? If you start tracking this, you'll see the ones that get hot. They price above the initial pricing range. So you'll start to hear whispers that the company is going to price between $20 and $22. And then the IPO price comes out, and the IPO price is higher than an initial pricing range. So maybe it's $25. And the reason why that's important is because that shows that there's a lot of demand for the particular IPO, and it couldn't even get filled in its initial public offering. So there's going to be people on the sidelines who are likely to jump in when it's trading live in markets who couldn't get it with a special IPO and are going to want to buy it when it starts trading. You want to look for tier 1 underwriters in the stock. If you're looking at tier 3 underwriters in a particular IPO, that's probably not a good sign that the IPO is going to be hot and really pop. You want to see the IPO open above the IPO price. So let's just say the range of the whisper was 18 to 20, and let's just say they priced the deal at 25. Well, when that opens, you want it to be above even 25. Those are the variables of a hot IPO. And then you want it to be in a hot sector. IPO comes out in a hot sector, there's going to be more confidence for people to jump in there and buy it as it's a way for them to invest in perhaps something that they aren't invested enough in, that perhaps they don't have enough risk for that particular sector, or it gives them another opportunity to catch something that they missed. So the fundamentals for this IPO trade, this happens to have been in Sono. It's a company that designs and develops multi-room audio products. I'm sure many of you who are listening to this presentation have them in your own home. They're competitors with Samsung and Apple and Amazon and Google, but they get some really cool, neat speakers that a lot of people are using in their homes. The range of this deal was $17 to $19, and it could only sell for $15. So that's gonna make me pause about whether or not this is going to be a hot IPO. Now remember, we think about trades in variables. So this is going to be a strike against the company, but it doesn't mean we're not going to want to trade it on the long side. It just means I'm going to be a little bit more cautious because they couldn't get the deal done above the range. If it was a hot IPO, it would have priced at 20 or above. Sonos speakers can play music from Amazon, Apple, Google, respective of streaming services. The IPO follows many high-profile offerings such as Spotify, Dropbox, and DocuSign. So I like the thinking here, which is how did other IPOs in this particular sector or a similar sector do? If they were hot, it makes it more likely that this IPO is going to see a lot of demand. Market cap, pretty big, almost $2 billion. Average volume, 11.4 million. And 52-week range. It just had started when we're going to show this example, so let's not make a lot of that. All right, the overall outlook in the market. Market's strong. Use it rally. We look at tick to tell how our trading is intraday. It opened negative, but by midday there was a high tick. So always want to check in on where we are with our overall big picture, where we are with our overall markets when we're making trade decisions. One of the variables we want to check in on. All right, so we've done that with markets. What's next? Our SPY daily, we're up towards highs. We want to look at the big picture. Where are we with this overall market? SPY on the 1 minute, intraday, the market was very strong. That's going to make it more likely we want to get long stocks than short them. Qs. All right, this is tracking a technology sector. How's the technology sector overall strong, doing very well. You can see from our daily chart, near all-time highs. 1 minute. This is a day where the market was very strong, technology was strong, the SPYs were strong. Look how it holds consistently above VWAP. VWAP is this purple line that we've drawn for you. Look how VWAP is sloping upwards, another sign of strength in the overall marketplace. The ticks, this is something that we look at to determine strength in the overall market. Started negative, started to get a little bit more positive, getting a little bit of momentum for people to buy during this day. We look at their daily chart, not much, only have 2 data points, but good practice to think about where we are in our daily charts. We look at our 5 minute, and we can start to see some levels that become important, and we'll point them out to you. Look at our 1 minute, and I'll talk a little bit more about this. Strong uptrending stock, holding very cleanly above VWAP. All right, so I said at the beginning that IPOs trade better overall and are cleaner technically overall than a lot of other technical analysis trades that you make. We all hear frustrating stories about, oh, I bought the breakout, didn't work. Oh, or I shorted the breakdown, it didn't work. Or I bought it at the 200-day and it didn't work. Or I bought it at the 8 M&A and it didn't work. And so these are levels when they get created that work better. And they work better because they're new and they're young. And it's not as hard to figure out what the important technical levels are. That can be some of the problem that you have when you're looking at other charts to make decisions based on technical analysis. There's all these data points, and people can interpret them differently. With young, new stocks, there aren't as many data points. There's not as many conclusions and different conclusions that can be made about stocks. Gets above a 52-week high. There's not a lot of 52-week highs in the stock, and it's probably going to go up. So the opening print is a important technical support level for IPOs. The very first print. If it's above that, that's a sign of strength. If it's below there, we want to note that and probably wait for another support level to show itself. The IPO price is a very significant support level in an IPO. That's because the underwriters want to support the IPO price. They don't want to be embarrassed and lose money for the people that they're doing this deal for. Breakout prices are significant technical levels. All-time highs are significant technical levels. IPOs with technicals, they respect technical levels much better than other stocks. And then we're going to show you in this example, 50% above an IPO price can be resistance. All right, so let's take a look at a marked up chart on the day that we were trading this IPO. We've got the stock 16 was an important level where we started to look at. Now remember, we got priced at around 15, so it's opening up above the IPO price. But that opening print ticks a little bit at 16. And then it starts to pull in below that opening print and starts to pull in towards that 15 area. And so remember, 15 is our IPO price. It's not very likely that it's going to trade below 15. And so as it's pulling into 15, 50, I like to scale into 15. So, all right, it's below 16. As it's pulling into 15, good company, good underwriters. I think that 15 level is going to hold up. It's not likely it's going to trade below there, particularly in the first day. I'm going to sort of scale in. So I'm going to buy a little bit of 15.50. I'm going to buy a little bit of 15.25. I'm going to buy a little bit into 15. And then if it holds 15, I'm going to really buy a lot. So every 25 cents, I'm making a trade decision to sort of scale into a position, assuming that 15 is going to be an important technical support level. And then at 16 was that opening print price. We talked about how that can be a technical level. So dips below a little bit below that 16, comes into 15.50. We buy a little bit there. Tier 1 gets above 16 again. So holding above that opening print price again, that's going to be our support level when we buy tier 2. It gets above the high that was created. Now we're at a new all-time high. We want to buy a little bit more, tier 3. We're going to trade that as a momentum lot on the breakout. We're going to sell stocks that are parabolic to the upside, that are unsustainable at price. So we get a stock that goes up, slows up a little bit, and we're going to take some off. And now we're starting to see a little bit of a level develop here at this 1850 level. Get a good support level here, it gets below it, comes back to it. Good consolidation here at 1850. A lot of people buying and selling up here. A little bit of a fake breakdown off this 1850 level. Reclaims it just like we reclaimed 16. When we reclaim this 1850, we can use this as support. Our stops are going to be below the last consolidation area, and we're going to ride the wave to see if this go back up. I'm going to get a little bit back in here. And that stock, again, we want to sell into the strength, sell into moves that are too spiky, that are parabolic, take our risk off. And so we can sell tier 3 and tier 2 into the high, into the close, and we're going to hold one overnight. And the reason why we want to do that is just show you how you can turn this into a swing trade as well. I like to hold positions that are doing well into the close, particularly if they're IPOs. That's a good best practice. If things aren't trading well into the close, cut it and start over again. Next day, we get a stock that goes up to that 50% above the IPO price level. We're going to get that around this 2250 area. And so we've got a trade decision there. I think when we get up to about 50%, that's where we want to start taking some profits again and watch. One of the traders on the desk noted that one of the last important IPOs had trouble at 50% resistance. Some advanced traders will even start to short it and watch to see if there's weakness up there. But that's a technical point of reference for you as well. So we can swing that and capture a little bit more as that stock closed a little bit near 2050, and we got a little bit of a pop on the open, a couple more points, take that off and start again. So in our trade review, we want to think about where we could have traded it better, where we could have traded it bigger. What you learned from this talk, how to trade an IPO. Important technical levels for IPOs. IPOs trade better technically than other types of stocks. A new trade to add to your playbook. Professional traders have this in their playbook and profit on it. I think a lot of independent and new guys shy away from it or don't know about it. Maybe you guys do. How to think through a trade like a pro. So we're always managing our risk. We saw the consolidation area where we took it off. We want to sell into strength, buy into pull-ins. We want to get into the habit of taking profits, even when we're in the money. So we're more consistent as a trader. So if we're long, we're going to sell the spikes and try and buy into a little bit of a pull-ins. If we're short, we're going to cover into steep down moves and make cash flow around our core. And you certainly learn how to build a playbook, how to build your trading business. I always hope that the thing that you learn from these videos is how we're thinking through trades, how we're putting variables together to make a complete trade and not just relying on one thing. to make really solid trades. So if you learn anything from this video, I hope you start to think about your trades with more variables. I hope you make your trades your own. I hope you make your trades very consistent for the way that you go about trading, and you settle in on a playbook. You build a playbook. Your playbook is your business, and you can judge your trading based upon whether you're taking a trade in your playbook or outside of it. Overtrading is taking playbook trades outside of your playbook. Poor trading is taking trades outside of your playbook. Losing trades inside your playbook are fine. We're happy with that. Trades that you didn't put enough risk on, that are A+ trades in your playbook, you need to focus more on. You got to make more on your A+ trades. That's not acceptable. You got to push it from your positions of strength and in your best trades. Go ahead. So the general trade overview, love actually doing this. We're going to talk about the specific trade in a little bit, but I also like to think about if we were to make this trade 1,000 times, what would be our general outline for how we would attack this trade? And so our general trade overview in this particular trade is we want to identify a wedge consolidation in a stock after a strong up move. We want to see elevated RVOL, relative volume. We want to buy small, anticipating the breakout. When we see that wedge pattern, we want to add full size in the breakout. We want to see a breakout with increasing volume. We want to sell one lot as momentum fades, so we're taking our profits. We're going to hold the rest until there's a reason to sell. We'll watch the leaders in the pot names for sympathy plays and information. The bigger the wedge, the bigger the potential breakout. So why not buy and hold? Mike, this is a hot sector. Why not just find a spot to get in it and hold it for a long period of time? Won't we make more money? Isn't that a better way to attack it? We certainly could do that. That's investing. This is trading that I'm talking about. We're going to stick to our niche in markets. All right, Mike, so you're sticking to your niche in markets. Why not swing trade it on a short-term basis? Okay, that's perfectly reasonable. I'm not going to talk about that particular trade in this video, but the principles from what I talk about today could be applied if you're thoughtful to that time frame as well. I will say that on our desk, one of our traders, actually two of our traders, now I think about it a little bit more in depth, two of our traders were long the stock that I'm going to talk about around the 60 to 70 cent area in the CBSI. And they were long with really, really long size, and they were playing it for a home run trade, and they had done the research about how this particular name was undervalued, and there was going to be news catalysts coming up in the pot sector, and this was something that they wanted to get out in front of and give it a run. And a couple of them did very well, holding it for a longer period of time, making that sort of longer term swing trade in this. We're going to focus on an intraday trade for the purposes of this discussion. It offers an excellent risk reward, and the trade I'm going to talk about also has the benefit of you don't have to be right overall about direction. So these pot names, they can go up too much and then pull in quite a bit. And so if you're just sort of buying and holding, you can buy it at the wrong price and really get stopped out for a tough loss. And the trade we're talking about, we're trading it, trading the volatility in the sector. We don't have to necessarily be right overall. Here's a picture of our SPY charts. I bring this up because we always want to know when we're making a trade where we are in the overall market. If the market had been really weak and we were really bullish on this particular sector, that might drag down our idea. Or if the market overall is really strong, that might give us more confidence to play a bullish theme. SPY on the 1 minute chart, strong opening drive on the day we're going to be talking about, followed by a wedge consolidation pattern, holding above VWAP. So the market long-term is in our favor. The market intraday is in our favor. CBSI intraday fundamentals. Here's the information I want to know about a stock before I actually trade it. In my book, One Good Trade, I talk about one of the fundamentals to putting on a good trade being properly prepared. So here is some of the information that you want to be properly prepared in a stock. So what's the float? Float in the stock is about 80 million shares. The short float, not listed yet, but good job of looking to see what it would be. The average volume in the stock is 3 million. The ATR is 0.9. The company focuses on developing and commercializing prescription drugs utilizing cannabis. CBSI, so it's in this hot sector. It's in this hot pot sector. CBSI had run from 50 cents to 8 over the course of 4 months. That's a pretty good return. The chart was overextended and started to look parabolic. Had a very strong sell-off, 60% off of the highs. For those of you playing at home, Citron came out with a hit piece on it and caused the stock to drop intraday after they called it out for trading at such high levels. Recent price action, and so this is after that hit piece had come out. Recent price action in CBSI was likely fueled by the activity in CGC, which is breaking to new highs on news of a $4 billion investment from Constellation Brands. So it's a hot sector, and there's real large money coming into the sector. It's becoming legitimized. A real company is putting real money into the sector. So it's moving from speculative to speculative with confirmation from real money. CBSI in the daily chart. You can see it has really run up from where our two guys had captured it before the that huge run up from 50 cents all the way up to 8. Had a little bit of a hiccup when Citron came out with its research report, is now trying to figure out what to do after that report. CBSI on the 5-minute chart, you can see accelerated buying the previous day, followed by a sharp sell-off marked by the end of a parabolic move. And given the size of the sell-off, a large bounce could be expected. Because you want to know why that stock pulled in? Well, it pulled in because there was a research hit piece that went out. Looking at the 1-minute chart, so when we look at this 1-minute chart, we're getting this wedge pattern form. You can see the wedge pattern forming right here through most of the morning. And you notice the decreasing volume into this wedge. Okay, and then when we get above the wedge, we want to look at our volume as we talked about in our initial variables, and we want to look for a surge in volume. So we're getting declining volume in the breakout with a wedge pattern, getting an ascending triangle wedge pattern. The stock is holding above VWAP. We get this really strong move to the upside with very large volume. So we're getting that first variable that we talked about, that strong opening drive. We get that right here. And we get the volume confirming that there are real buyers in there. When we get our wedge pattern, we get a really tight wedge pattern, which we love. In that wedge pattern, volume is declining. In this wedge pattern, we're getting an ascending triangle. When we get outside of this wedge pattern, we want to see the volume surge. We're getting that as well. So we talked about sympathy plays. So the leader, and this is a working thesis on our desk, was that CGC was the leader in the pot names. In fact, I received a note from one of our guys in his daily report card, and he wrote, the pot stocks are moving, and this is a theme that one of the traders and he had been monitoring since CGC came out with earnings. CGC had been the leader, but TLRY and CRON had been moving in sympathy. And this has been a good opportunity to get better at thematic sympathy plays. And so guys were tracking it. You had CGC as the leader. You had TLRY, CRON, CVSY, all in the pot space. And guys were watching the leaders to see if that would give leading indicators as to where some of the other lesser names in the space would go next. And so I love this idea of, hey, where has CGC come from? And what is it doing while we're thinking about buying the stock when it's in a wedge pattern? You can see the run up in CGC. And then we want to peek at this 1-minute chart to see if it's going to give us a leading indication as to what's going to happen with CBSI. Now, on this day, it doesn't mean we're going to only go by that, but we're trying to make really informed decisions. And one of the things that I recognize working with really some of the best traders in the prop space is that the best traders put a series of variables together to make more informed decisions. The underperforming traders lack enough variables with their setups to make consistent money. And so always looking for, hey, what can give us a more informed decision? So looking at the leader recently in the pot names can be a variable that gets us to have more confidence in buying the stock. So we're going to peek at it. Okay, so we're going to note that CBSI was strong when CGC sold off, both at the open and the morning. And CBSI is showing this relative strength. So we got the leader really, really selling off, and we got CBSI really holding up. It's showing us this relative strength overall. And in this case, this is a little bit more of an advanced thought, but it's actually giving us more confidence that there's a bid and buyers in that stock on this day because it's not trading lower like we would expect it, like CGC is doing on this particular day. We're looking at Crone, another pot name in the sector. It's in the same sector, traded similarly, though it seemed that CGC was the leader. We're going to peek in at this as well. All right, so how's this doing overall? Peeking in at CGC, peeking in at CRN, peeking in at TLRY. Checks in our favor. Marijuana stocks had been hot recently. CBSI showed relative strength when compared to CGC and Crone. So what are we doing with these checks in our favor? We're thinking about what are the reasons why we might be right in the play? What are the reasons why we might be wrong in the play? What's the counter thesis to our particular trade? Why should we be in this trade? And we're constantly thinking about the checks in our favor and the checks against us as we're thinking about getting into a trade. We're constantly reevaluating whether this is a good play or a bad play. We're not just wedded to the idea that this should go up. We are traders. We are absorbing information. Check to see how CGC, TLRY, CORN are trading. The SPY was in our favor, strong and wedging at the same time. The size and speed of the crash in CBSI increased the likelihood of a large bounce. So we had that Citron hit piece. It pulled in way further than you would think. So it's got room to bounce. CBSI wedge held above support, as seen in the chart, held above VWAP. That's a great indicator that we're using on an intraday basis and lasted for an hour and a half, which implied a large resulting move. A tight wedge pattern gets lots of people short, lots of people long, lots of people short, lots of people long. And a stock in play, you're going to get a rubber band effect. It's going to really move away from that wedge pattern. Largest liquidity day ever was the day before. So any funds shorting large size would have to cover soon to guarantee that they got filled at a reasonable price. So those are checks in our favor. Great exercise to be going through when you're in a name. Don't just sit there and say, I'm right. What are the reasons why you might be right? What are the reasons you might be wrong? Evaluate. Trade management in this idea. Okay, we want to buy when the wedge is established around this time, once an upward support line and downwards resistance line can be clearly drawn. So we're buying into the bottom of the wedge. We're getting long size here to anticipate the move as we're getting our ascending triangle, and as time is going by, where this wedge pattern is holding above VWAP, we're buying a little bit more. And then we're going to buy more on the break of the wedge as volume increases. Okay, so we're looking here. You can see the volume does increase. It does increase when we break out of this wedge pattern. That's very important. Do we get that volume increase? We do. But even more, we're going to buy even more once it holds above the wedge for a few minutes. And we're going to take some risk off at the top of the wedge trend line for these lots. And so one of the things that I recognize that elite traders do is they take profits. All right, so some of you just want to buy it and hold it for this type of trade. And for the traders that I work with, one of the things that I'm recognizing and noticing amongst them is that they're not buying and just holding. They're making trade decisions. They're not just buying and holding and predicting they're going to be right. They're buying, and as they are right, they're selling when they can. They're taking profits. They're taking risk off the table into sharp up moves. So we take some off into the initial move, and we're going to take some more off into that 590 area as it's having trouble making a new high. We have a time clock in our head. We expect it to go higher. As it pulls in and can't make a new high, we're going to take some risk off the table. And then when we can hold that consolidation area at higher levels around this 580 level, we're going to get flat and start over again. All right, just like we're going to buy more here and add more at another tier as the ascending triangle is holding higher. When we're not making new highs up towards the 6 area and time is passing, we're going to take a little bit of risk off the table. All right, great pattern, powerful pattern. You'll see it every day. Great way to express risk in a bullish sector in a responsible way for your trading. All right, always good to go over how you can improve in a particular trade. What you learned. All right, what you've learned. You learned the pot names that are most in play that we're watching on our desk. You're learning a powerful trading pattern to trade this sector, a powerful trading pattern, that wedge pattern holding above VWAP after it has a strong opening drive. We talked about, and you learned sympathy trades. We learned how to take profits in a trade. And as always, the thing I hope you learn most about these videos is how to think like a professional trader. That's the biggest reward that you can take away from a video like this. Hey, so